What's up? All right, today is 2020. Tax strategies, simple tax strategies you can use. So I am going to wait until some people hop on. If you join in from Facebook, Instagram, or Twitter. Matter of fact, once you hop on, you know, let me know where did you join from? Twitter, Facebook, Instagram. I just want to see something, and also, get those thumbs up. We like thumbs up over here, So, and I want to say thank you for joining. You don't want to miss this opportunity. So I will be on probably for the next hour, hour and a half. Uh, stay with your boy. Might even take some phone calls and might close some deals, but we'll see. Like I said, this unscripted over here, like this. We ain't commercial over here. This unscripted. So uh, I want to see the real side. I want you guys to see the real side of business. Business don't stop, even for live streams. All right. I'm just trying to share my link with Facebook and Twitter. So Still waiting for people to join. Shout out to K&B Cooking and Eating. Um, she just created her YouTube channel and already got over 100 subscribers. She having a 100 subscriber party. Um, her channel is about food, cooking, stuff like that. So if you're a foodie, make sure you look into that channel, K&B Cooking and Eating. Um, so. But thanks for whoever joined. Once again, if drop your name, drop your handle. If you have certain questions about your taxes, feel free to add it in the comments. Um, I am going to get started soon, trying to maybe get one more added. What's up, B? My homie B. Let me know if you can hear me. Put the thumbs up if you can hear me just fine. High definition. These coaches be looking like death on high definition. Jeez. Cool. All right. So I guess I'm gonna just get started. And if anyone join, they join. If not, oh well. So from my studies, studying wealthy, working in finance, and studying accounting and finance. Um, they basically just teaches you the strategies of how to save money and kind of, I won't even call it manipulate the IRS system or the tax system, but let's say manipulate it. And before I get started, I want to make sure that anything I say will not be used against me in a court of law. So, but also make sure you see your attorney. And also research anything I say. I'm even if I do take advice from anyone, I'm always researching what they say. The tax code get updated yearly, and so you definitely got to stay informed. But anyway, so one of the ways to automatically save some money, what you should do is withhold as much as you can from your paycheck if you have it. Um, some you know, maximizing your deduction. Once again, you'll want to talk to your tax preparer or tax expert, but you know, put 10 deductions if you have it. But once again, you want to um, limit how much your employer takes out of your paycheck per week, per month, or how often you get paid. So that's a big one. Too many of us are naive in thinking that they just automatically have to take it out. No, you can kind of change that. Um, and you should. So that's one, and that's a big one. And something in line with that, especially if you're still working, is maximizing your contribution to your 401k. The more you put into, like, they do recommend putting in a max. I also know that some of us can't put in a max, or if you're not really focusing on your business or not investing in your business, then you're probably not, maximizing your 401k. But if you can, that's another great tax strategy that you can implement. A lot of times, and like I said, this is from my studies, you can actually do it while you're filing your taxes. So say if you miss out doing it throughout the year, you can actually create, open up a Roth IRA, a RA, and contribute during the time you are filing your taxes. So don't think that, just because you didn't contribute during a year while you was working, or they didn't automatically take it out, you can't take advantage of this tax strategy. You can. And once again, every strategy is not going to um, work for you, or your situation. One strategy might work for your situation, other strategy might work for somebody else. Okay, so Brendan said putting 25% in his, I guess, mutual fund or 401k back at Honda was the smartest thing he did in his time frame. So I'm gonna get him to explain that, and obviously I'm gonna read it. So why? I mean, obviously, I would definitely agree with you, but why would you say it was the smartest thing that you did? Like, what did it lead to? And if you guys don't know who Brendan is, he was actually on the YouTube show Young Entrepreneurs. He talked about uh, we just talking about business and starting a business and the ups and downs of the business, and um, going from A to B to C, or how you might start a business and it looked like this in the beginning, but it transformed into something else midway. And currently, that's what uh, his business is undertaking at the moment. And I can honestly say with mine as well. When I first started, business, it was just more about me just trying to hit it quick in the stock market, option market. And then I really had to learn and understand what was business was, and, providing value to the marketplace. Gotcha. So basically, putting that 25%, and it does, helping you save, and it helps you out of mind, out of sight type of scenario. Um, appreciate whoever joined. Make sure you add your either Instagram or Twitter to the to in the comments. So um, but oh shit, and that allowed him to take, by adding 25% to his account, it allowed him to take off a whole year without having to worry about money. That's what's up. So you must was making a whole lot of money in order for that to happen. Um, so yeah, but using those tax strategies is definitely a good way to, like I said, save your money, keep it out the hands of the greedy IRS. I don't know anyone that like the IRS. Matter of fact, put the thumbs down emoji if you hate the IRS. So trying to see if I see it. I can't find it. Anyway, so once again, we talked about putting your money, or putting more money, putting more capital towards 401k, investing in your 401k, maximizing your 401k if you can, your contribution. We also talked about the maximum number of deductions that you can put on when you first get hired at your job. Once again, you want to make sure that you are maximizing that, so they don't take as much out, and more going into your pockets. So another thing that's kind of job related is called a health savings account. You can also invest in that. You can contribute money into that. That's just another way to say, hey, the government either was going to tax it, or I was going to spend it some type of way, and the government was going to tax it. But let me put this in this account, save it for my health expenses, my health expenditures throughout the year. You have to check to see, because I know some business allows you, like, give you a Visa, and I think you can use it like it's just a regular Visa card anywhere. But you have to check with your company. I don't contribute to that because I don't plan on getting sick. I literally give myself 0 hours. So that forces me to take care of my body, mind, and soul throughout the year. To me, I feel like if I contribute to the health savings account, that's giving myself a way out to say, okay, it's okay to be sick this year. I don't ever want to be sick, you know. Um, do I get sick from time to time, or feel bad? Yeah, but I rarely get sick, like to the point I need to go to the doctor or hospital or anything like that. Besides my yearly checkup. So anyway, that's a side note. So, but once again, that is a way to save. Uh, you know, the next one is actually going to be the biggest, or one of the biggest and more powerful ones is, and more should take advantage of this. I don't think they do. Hopefully we do after this. It's basically just creating you a business. Creating you a business is one of the overlooked ways to saving money during tax season. And let me explain. So when you get started, a lot of times, you just got expenses that you're paying for, and those expenses, could be used as write-offs. Obviously the goal and for business is to serve and to make some money. But government also know that it's unlikely that you are going to be successful in um, it's unlikely you're going to be successful in the beginning. So they allow you, especially in the beginning, to write off a lot. Once again, you want to see um, your personal tax advisor um, or your attorney to see the match. I mean, it's different for different business types. Um, but once again, it's just a good way to allocate your expenses and be able to write them off. Like I said, we all create expenses during when you start a business, and when you separate, your personal and your business, that's even better. No, matter of fact, you must. That's almost a must. That's a big red flag if you don't do that. If you do not separate your if you do not separate your personal expenses from your business expenses, uh, it could cause a red flag in the IRS, a potential audit, and stuff like that. So, and for me, I look at myself just being 100% business. So, every day I'm talking to someone about business. So if I'm going to lunch, hey, this is a business lunch. If I'm taking a flight and going to New York City soon, that's a business trip. Um, Mobile, Alabama, that's a business trip. So you damn right, I'm writing that shit off on my taxes. And I did my precautions. I make sure that I put it on my business account and not my personal account. So, like I said, that's just ways to protect yourself. Um, and that's just a way to basically that's just a great way to protect yourself. And then with inside that, when you start the business, a lot of times, you got the sole proprietor. That don't really give you that much protection, so you might as well just start off with the LLC. Once you start making some money, probably over like 250K, then you are going to either have to go over to the X Corp or the I don't know if it's called or the corporation. So the X Corp or corporation, and let's just give you a little bit more protection, and also it's give you more advanced tax strategies. And like I said, I've been in the last few months, I've been, sitting on calls, with tax experts, talking to tax experts. So this is just, nothing I'm, making up. And like I said, I worked in, taxes and accounting and finance, for the last 10 years. So once you get to a certain level to the advanced stuff, you talking about putting kids into your business and being able to deduct them or get credit. So it's a lot of powerful ways to truly save money. And basically, the gist of this, and I want to, like I said, I gave you some tax strategies right there. Like those, some of the simplest, the basics. Some of the business that I have heard in my channel are just basics at the moment. So I don't want to go too in advance. But those was the basics. But let me give you an overview and the importance of why. So say if you're making 200K a year, 250K a year, people are great. People are, oh, I'm making 250K. But due to sales tax, due to breathing tax, due to income tax, due to gasoline tax, due to garbage tax, due to funeral tax, estate tax, bullshit tax, all these taxes, it, so you go from making 250K and then, 40%, you know, so you down to almost 125K, and that's just maybe to the government, so that's not yours, you know. So basically the tax write-off allows you to keep more money in the beginning, but instead of you giving them the money, you actually spend it. So it's almost like it it's a incentive from the government actually, and that's why you hear when people say, like the business people say, "Oh, Donald Trump is smart because he don't pay taxes," but the regular folks or the people that don't like him call him a cheat because he knows the system. So the government incentivizes people to, like, either you spend this money or we're gonna take it. Do you understand that? You either spend this money or we gonna take it from you. Damn, that's some straight bullshit. So, like the smart, they end up spending the money, on business, and hoping, through business, it's going to come back in tenfold. So, if anyone, believe in the Bible or anything like that, exactly, either you're a consumer or you're an investor. And that's basically what capitalism is, and that's just, it's really human nature. It's just human nature. Like, you know that's why anytime you got cash on you, that shit seemed to go like quick, 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 at least for me. Because it's just this human nature to consume and to spend. So, like Brendan said, either you're a consumer or you're an investor. So, and like I said, the consumer, they feel good in this country for a few minutes. They always entertain, but they never satisfied. They never full. A consumer will be like eating McDonald's all day. You know, it might look good. Well, I don't want to say look good. It might taste good at times, but it don't really fill you up. You know, um, and investing is, just like eating a home cooked meal. Sometimes that home cooked meal don't look the best. You be like, damn. But then when you bite into it, woo, it's full. So, um, you know, that's the best way I can describe it. So, I know I went on a tangent, but once again, the government basically incentivize you to either invest that money or, spend it in, in certain ways, or put like in investment ways, or they're going to take it. And and like I said, now this might be what some people call conspiracy theories or whatever, and that's, I don't even know if they can take it legally, or if it's just, we just so focus on like entertainment, focus on like all the other bullshit that goes on into this world, that we don't really have time to truly dig into it. Because I mean, I swear, if I read the history right, we went to war over some sugar tax. So that just let me know that people wasn't, people came to America because like, hey, over in America they ain't taxing people like in England. I think I want to go over there, land of the free. So, and but like I said, that's a different topic for a different day. But if it's over 10%, then the government taking too much, and I ain't going for it. So, but anyway, so like go back to the story. So 250. If the government was taking 40, you down to 125, or in that ballpark range. And on the flip side, if you keep more of your money, So say go back to 250K, and the goal is to spend as much as you can, to a small degree, until you get to a small degree or a small percentage, and use that as your income, or your bottom line. What would it be? It's top line. Because a lot of people, want to brag about their top line. Like I said, 250K, but then after taxes, it might only be 120K, or it might be lower. Um, due to taxes, or even due to write-offs. And it's not a bad thing if it is lower. Like, the only reason why you want to talk more about your top line is if you're trying to get a, a mortgage. And to me, my studies, I just don't see myself, at least no time soon, getting a mortgage, no 30-year mortgage. It just, I could barely commit to um, living in a spot for a year, let alone, wanting to live in a spot for 30 years. And I know a lot of people, oh, well, equity. I mean, a lot of times people that talk about that, they pick up one finance book in their entire life and they talk about equity. Like, that don't really mean anything. And, you can have it for 20 years paying up. And I truly believe, like the big banks know this, 10 years into it, and then, lose your job or lose something else, lose income, your spouse leave you, your wife, fall on the neighbors, the neighbors, fall in love with the neighbor, and next thing you can no longer afford the house, or the market, like in 2008, or around 2008, when the market went under. Now you got houses that you got loans for 500,000, but it's really only worth 150 or 200, so that's considered being underwater. So to me, it's not at the best investment like they say it is. It's considered a passive investment, aka lazy investment. That's a new name for passive investment when it comes to real estate. It's the lazy investment. Hold on right quick. You know. So basically, you truly want to show the government, if you're making 250K, you want your bottom line to be a lot lower than that. Like I said, I would truly have to be looking at a tax sheet, or an income statement right now to truly explain it to you. Next time, I'm definitely going to have one. And but you want that to be a lot lower, because that's what you're going to use as, hey, this is really, I know I say I gross 250K, but the bottom line is, this is what I'm really taking home, and this is what you're going to tax me on. So say 250K, but your bottom line is 50K. Shit, you tax me $5,000. That's cool. 10%. All right, I can live with that. But once again, in order to do that, you have to be in business. And you have to be serious about it. Like, I know within my first year of business, I wasn't that. I want to say I wasn't as serious as I am now. You know, I thought I was, but I wasn't. I was at the bar all the time. I might tell friends, yeah, I want to start a business, or, I started this, but, it would go 6 months. And I mean, probably some of y'all are in the same boat. If you're not working on your business day in and day out, y'all are not truly in business. Um, and, so you're not probably going to be able to take advantage of this or you might not even be balls enough to try to take advantage of it. So you're gonna, give your money away to the IRS. So, but to me, I want that bottom line to be as small as possible. I am going to try to take advantage of every break that I can get, especially as a small business owner. And and like I said, that's what they all do. You read articles about Jeff Bezos, you know, uh, not paying that much in taxes, and got $1 billion because he hiring the best tax strategist, so his money can go to the projects that he really wants to go and go fund. And say what you want about that scenario, but if someone's creating $1 trillion market cap, he they are making an impact in this world. Um, you know, now just because the money is not going to the government, don't mean that he's not doing well with that money. So and like I said, I mean, sales tax, electric tax, gas tax, water tax, fresh air tax. This ain't fresh. City tax, local tax, all these taxes. So don't tell me, someone is not paying enough in taxes when, you know, every day we basically getting taxed, and then once we leave this earth, it's going to be a tax. So, um, that's straight bullshit. And like I said, it's the media tried to get you to not like people like that because you know because they give you the game for free. So whereas the media is 100% controlled by the big banks. That's who pays for their advertisements and stuff like that. So so they don't. I mean, they try to give you the truth. Don't get me wrong, but it's little bits of it. They don't want to give you too much hope. They need you to come back to work that Monday. They need you to buy that real estate. Like everyone, like be happy to get that house. Um, you know, and then 10 years later, when they try to sell it, and when it's not as worth as that amount of money the realtor said it's going to be, they piss, or they can't um, they can't sell it as quickly at, they once were. They pissed. When I first started this YouTube, you saw me in the house, and I left the house, or my landlord sold it, and they was in that house for 15 years. And they truly thought the market or their house was worth this certain amount. I don't want to put their business out there like that, but you know it wasn't. And you can just tell, the look, they're like, man, that was one of the worst decisions that they ever made. You know, not only that the house then, produced the fruit, they almost thinking, okay, if I buy this house, 15 years later, I'm gonna have enough to retire. Nah, somebody lied to you, so, and I think a lot of people are now truly waking up to the idea of, just renting, and, it keeps you nimble. Like I said, who tends to, want to commit? I mean, most people can't even commit to their wives for that long, or to their husband for damn a couple of months. You think you can commit to a house for 30 years? You can't even commit to your job for, 6 months. So, can you commit to your favorite sports team in a few years, let alone, trying to commit to a house? So anyway, So that's another tax strategy. Now, like you can always, and I didn't Google any of these. These are some that I have personally utilized when I work. Another big one before I, talk about another one. Another big one that I utilize, and I have to give credit to. Uh, Expedient Tax, where I worked as a tax professional a few years ago. It is your health, um, is your health benefits. Make sure that your tax preparer is maximizing your health, how much you pay for your health. That's actually a big one that I wasn't aware of at that time, and that can truly help bring down your taxable income. How much you're paying off to to the IRS. Once again, it's all about keeping as much money in your pockets, less money in Nancy Pelosi pockets, so she can go get another skirt, or Donald Trump, so you can go golfing again. Um, you know, like I said, I don't know about you. I need my money. What's BRB, bro? So got a phone call. Hey, what's up?
What's wrong, Jay?
Not much.
Hey, I got this gent down here ready to come on up. Can I send them up to the unit or send them up to six?
You Gerard?
No. I got Al down here.
Who the hell is that?
Al? So, hello?
Yeah.
Coming down?
I don't know who that is, bro.
Happy birthday, man. Happy birthday. All right. You want you want to talk to him?
Yeah.
Hold on.
Who the fuck is this? Got me swearing. Who's this?
What's up, man? It's Al.
Al?
Sent you a text message. Yeah, I sent you a text message like 5 minutes ago.
For Gerard?
Yeah.
Okay. Yeah. You can come up.
All right.
I mean, you been to
Jay.
Yeah.
Yeah. So, are you coming down, or you want to?
He's coming up.
Huh?
He's coming up.
All right, to the unit.
No, to the 6th floor, to the music room.
Gotcha. All right.
Appreciate it.
All right, man.
All right.
I'll talk to you soon.
Cool. Damn, I got calls today. Ain't no money though.
Huh?
I was talking
Yeah.
talking to the people.
Oh yeah. So I'll see you soon, man.
All right, man.
Come on. All right.
My bad about that, folks. So another one is, and like I said, another good way is, like I said, it's probably not something that you're going to do as a non-tax professional or you never work in it, but this is the best strategist. What I would do, have a list that you think that you can write off, and then go to your tax planner, tax professional, and like, hey, what about this? You know, my boy Jay, he told me I need to be writing this off. I need to be writing that off. And if they say no too many times, you need to get you a new tax profession because most of them should be saying yes. Yeah, yeah, let's try it. Let's do it. Let's do it. You know, and like I said, don't worry about being audited, bro. Like if your ass is making under if you guys ain't making that much money, you know, you're not getting audited unless you're doing something stupid like putting kids that's not yours on your tax plan. I mean, on your you know, kids that's not yours on your file, or you know, stuff like that, you know, using the wrong social security, you know, that's the stuff that get, you know, low income people audited. You know, the stuff is not matching. Like what I'm seeing is 100% legal. you know, it might some small technicalities, and that's why you have to, check your, legal advice, your legal team, but everything else is, based on legit. So, like I said, you are using the right number. So, if you only made 100,000 a year with, with your employer, that's all you're going to put. Your employers send out how much they paid you. So if it don't match, guess what? Red flag. Dum dum. What's up, G?
Yeah, what room you in, bro?
Hey, I'm in the TV, the music room.
All right, I got you. My man just got off the elevator. I'm gonna send him to you.
Got you. I'm about. So, but one I see that's part of, by just Googling, by just doing a Google search, is investing in municipal bonds. And basically, those are city bonds. When you see municipal bonds, basically, that's what the city offer. Typically, they do have a tax break, a tax incentive. You know why? Because they way more risky. Especially like a city like Chicago, where we kind of high in debt, is way more risky. Now, we do live in one of the greatest country, least greatest financial country in the world. So I don't see, our debt collapse anytime soon. Matter of fact, America never missed a payment just yet, So, but once again, that's, American government bonds versus, city bonds, municipality bonds, So like I said, that's a little different. But typically, you do get a tax savings with that. I'm not going to go into full details because that could be, I mean, literally, that was almost a whole chapter or two in my college courses. So, but a lot of people do mix that in with that, but, like I said, I'm keep getting these calls and I don't want to be rude. So I'm going to end it there. I am going to next Wednesday jump back on another live and do another tax savings because once again, matter of fact, until tax season is over with, all Wednesday is just about tax and money. All Wednesday just go. That's what the topic is going to be: tax and money. But anyway, see you soon and stay blessed. Shit, and this.